Zomato decides to withdraw its application for NBFC license, saying it doesn't wish to pursue the lending business anymore. Zomato told exchanges that there is no material impact on the revenue or operations, and this disclosure is being made voluntarily.
Health tech startup Watch Your Health raises $5 million, led by Cornerstone Ventures and Conquest Global, funding to help scale operations and expand the user base both domestically and internationally.
Visual entertainment tech services company, the DNEG Group, raises $200 million from United Al Sakir Group. This is at a valuation of excess of $2 billion. The funding is going to be funneled into Brahma, the firm's AI-powered CGI creator, and help content arm Prime Focus Studios increase its content production.
British fintech startup Revolut makes a record pre-tax profit of £438 million in 2023 on strong user growth and soaring interest-related income. Revolut CEO is confident about securing its British bank license soon after overcoming some key hurdles.
NVIDIA is set to be charged by the French antitrust regulator for allegedly anti-competitive practices. According to Reuters, this is the first enforcer to act against the chipmaker. This follows a series of raids in the graphics card sector conducted last September, which were part of a broader investigation into cloud computing. Okay, so those were the headlines that we've been tracking for you from the startup world. Now, B2B fashion manufacturing platform ZYOD has secured $18 million in its Series A round of funding. This investment was led by RTP Global and also saw participation from existing investors Lightspeed and Ulterior Capital. The startup plans to leverage this new funding to grow its operations across more than 40 countries and to focus on tech advancements and talent acquisition. For more on the company's plans ahead and this funding, joining in now is Ankit Jaipuria, the co-founder of the company, and also with me is my colleague Shruti Mishra. Ankit, welcome to Startup Street and thanks for your time here. Briefly start by telling us about this $18 million funding. One, we understand this was not all equity, but a mix of debt and equity. So how much was each? And two, what's the deployment plan?
Sure. Thank you so much for having me at the show. In terms of the overall equity versus debt, the primary part is only equity. We started with a small debt portion because we wanted to build that prudence where we use loan to service our growth. So primary of it is equity. With respect to the growth plan, we are making a vision from India to the globe. So we are already in 18 countries. With this funding, we further plan to boost our exports and cater to more than 40 countries and also deepen our wallet share in the existing 18 countries that we have already ventured. The second primary part is to further invest in tech, where we change this current reactive fashion manufacturing industry and make it proactive and automated by using AI, by using IoTs as a service in our different value chains of supply chain.
Okay, Ankit, this is Shruti quickly stepping in and picking up from what you just said. Tell us more about these expansion plans across 40 countries. Like you mentioned, you're currently present in 80 plus countries, 18 plus countries. How large is this opportunity and what sort of growth are you expecting from these international markets as a proportion of your overall sales?
Absolutely. So see, as we say, roti, kapda, makan, these are the three most evergreen industries. So it's one of the biggest industries and it will be there till the time humanity is. It's $1 trillion market overall in global apparel manufacturing and sourcing. We plan to strategically expand into geographies in the Southern Hemisphere in order to cater to the seasonality of the overall fashion cycle. Not only that, we also want to cater to under-serviced countries like Africa, where the population is huge, Russia, South America. These are the countries which are not very well serviced with the Indian ecosystem. So these would be some strategic countries that would be going into, and further deepening our wallet shares with countries like Japan, Middle East, US, Australia, where we have presence and we'll further deepen our relations with the existing customers.
Sure. Ankit, what will deepen exactly mean in this Kapra segment that you're servicing? So 350 customers now across 18 countries, and you started with sort of D2C and then you moved on to conglomerates like Reliance and Aditya Birla, and of course you have your other partnerships in other countries. But how many more customers are you adding each year, and what is the segment that you're really focusing on?
Absolutely. So see, what happened in the overall journey, we started with the D2C base where we were building and establishing our overall supply chain. Now, once we have built the fundamental supply chain, we are able to sort of cater to enterprises where the order volumes are huge and they cannot afford delays or any quality issues. So now the focus is to go with enterprises across the globe. We have already started working with Next in UK, Anthropology in US, Boohoo in UK, and there are many other large retailers that we are currently focused upon. So that would be the major focus over the coming few years. And then there will be a second phase where we are also in the process of building a zero-touch self-serve platform where brands can come and do shopping as they do on Myntra or Amazon. And then we will have long tail customers served with no humans involved. But that is something which will be 3 years from now.
All right. So let's talk some numbers. Give us a sense of what kind of revenue the firm is currently generating. Since you started operations last year, Ankit, what is the rate at which business is growing and what kind of margins do you work with?
Absolutely. So if you would see, we started in January 2023, which was our first month of operation. We started with a zero revenue. Now we are doing annualized revenue of multi-million dollars. It's in double digit that we have grown. What we see in the coming next year, we take it to another 3x level where we will be closer to a triple digit, early triple digit revenue number. That's the overall growth. With respect to the margins, because the SKUs are not standardized, this industry commands very high margins. The listed players are upwards of 40-45% gross margins, and we are in the process of reaching to a high double-digit gross margins as we speak.
All right, Ankit, you're not giving us much to work with. Double-digit $1 million revenue, which will be triple-digit by next year. But thank you very much. We've run out of time. It was a pleasure speaking with you, and we wish you all the very best.
Thank you so much for having me, and it was a pleasure speaking to you as well.
All right, moving on. India's industrial capacity to produce launchers needs significant enhancement, and more companies are entering this field to increase production capabilities, ISRO chairperson said on the sidelines of the India Space Congress. The Congress also featured a space startup mixer session connecting entrepreneurs, mentors, investors and industry experts. My colleague Aishwarya Anand caught up with a few Spacetech founders and VCs. Take a look.
From groundbreaking mission to the Mars, the Moon and close to the Sun, India's space endeavour has made significant strides, well, not just in terms of missions, but also in terms of embracing private participation. After a historic 2022 first private rocket launch by Skyroot, Agnikul made history in 2024 with world's first 3D printed rocket engine launch. Now going forward, 30 space launches, including 7 by private startups like Agnikul and Skyroot, have been scheduled in FY25. I'm here at India Space Congress 2024 to meet some startups and investors who are building a future of boundless possibilities.
Incubated at IIT Madras, Bengaluru-based Galaxy Space that specializes in microsatellites successfully tested its synthetic aperture radar technology on a subscale, high-altitude pseudo-satellite which was developed by the National Aerospace Laboratories. This was the first for a private company globally. What kind of results have you seen there? What was this partnership about and how did it go?
It has really given us the results which has a fusion of EO and SAR sensor, which is something that we wanted to achieve. It has also given us an understanding of the miniaturization in terms of the mass and power budgets that we wanted to get on for a SAR image, SAR sensor. Imagery has been a fusion of both the collections, and it will be able to detect objects, to detect change and any progress on the field.
GalaxEye, which is building a constellation of indigenous microsatellites with data fusion capabilities, is now planning to launch the world's first multi-sensor satellite. Their soon-to-launch Drishti mission would be capable of observing Earth night and day, even peering through dense clouds.
This Drishti mission is very important, not just for us, but also for the nation and also for the world, because this is the world's first multi-sensor satellite containing EO and SAR on the same platform. From the perspective of launch, typically 9 to 12 months is what we're looking at.
Not just GalaxEye, another space tech startup, Digantra, is gearing up to launch its space surveillance satellites, claiming to be India's first. The company aims to release 40 satellites that use multimodal data pool to provide clients with data and orbital insights. For that, the company has recently unveiled its new Nerve Center in Bengaluru, which will serve as the hub of operations and customer engagement.
This facility is the only facility in Asia that is part of a bigger mission with the other countries, where we provide space domain awareness capabilities for different countries today, be it defense, military, commercial companies, insurance companies through this facility in Bangalore. We've been focusing on deploying our infra. Our infra is both space-based and ground-based. So we're setting up our ground-based observatory in Ladakh. Next month we will unveil that facility as well. And we're launching more and more satellites to track objects in space. And when we talk about satellite launches, we are doing at least 2 launches this year.
Indian space tech startups have attracted over 1,000 crore of private investment since April last year. Specially Invest, which focuses on deep science and enterprise technology with a portfolio of 40 companies including Agnikul and GalaxEye, is set to launch its third flagship fund at a marginally bigger corpus than its $38 million previous fund.
Fund 3 will invest between 25 and 29. Fund 2 has done 14 investments already. So going by the math of 18-20, we possibly will do 4 more investments in the next 3 quarters.
Any interesting space that you're looking at? Like something different than what you've bagged earlier?
So we remain very focused on 5 categories. Advanced manufacturing, which encompasses robotics, quantum, defense, semiconductors. We continue to be very bullish on space. Of course, we made foundational investments in launch, through Agnikul, in satellites through GalaxEye. We're now thinking what else can be done beyond this. InSpace is a great example where they're doing maintenance capabilities in space, right? So continue to be focused on that. Energy is a big area. We've done a lot of work on fossil fuel transition, but very little on decarbonization. So I think we'll see a lot more happening on the decarbonization side.
According to government data, India boasts of over 200 space tech companies. In 2023 alone, 53 new space tech startups were added to the ecosystem. In fact, to propel it further, InSpace has launched a pre-incubation entrepreneurship program. Now driven by increased FDI, public-private partnership, new advanced tech and upcoming incentives, India's space economy is set to touch $44 billion by 2033 as per a report by Tree Life. With camera person Saurabh Chauhan, Aishwarya Anand for CNBC-TV18.
All right, with that, it's time for us to take a short break. But up next, JCB Salons has raised 40 crore rupees from BlackSoil. We'll get you their story along with their future plans right after this short break.
Welcome back to Startup Street. JCB Salons India has raised 40 crore rupees from BlackSoil. Joining us now from a JCB Salon at Mumbai's Bandra Kurla complex is Arundhati Ramanan, along with its founder, Sneh Koticha contractor, and Ankur Bansal, co-founder and director of BlackSoil. Take a look.
With growing aspirations and increasing purchasing power, the beauty and wellness market is poised to be a $580 billion market globally, growing at a CAGR of 6% annually, according to reports. JCB Salons India is betting big on this particular market and has raised 40 crore rupees from BlackSoil. Now, how do they plan to grab a bigger pie of this billion-dollar market? I'm here at their BKC salon to find out. You know, Sneh, if I can start with you, right? JCB Salons has been around since 2006, and what a journey it's been. If you could sort of tell us about the journey and how are you keeping up with the trends at JCB Salons, and how are you bringing your global expertise to sort of, make it convenient for the Indian customer?
Thank you, Arundhati. So, I think when we started off, we knew that there was a gap, there was a very clear gap in the luxury salon industry. When this opportunity came along, I think my father just said, okay, what do you think of it? And I think even I didn't think or imagine that my father would actually take me seriously at that point to actually, take a bet on what we were thinking. But yeah, we took the plunge. I think we invested in our first salon in 2007. I think when you're luxury, the most important factor in this industry is to how do we keep hygiene levels up and how do we keep the quality of service and quality of product. So we invest very, very heavily in international training. We also bring down or fly down a lot of international trainers to India to actually train our people here. So I think along the way, we also learned that education is key.
But you've raised this 40 crore rupees from BlackSoil, right? So and primarily you're going to use that to acquire Spalon so that you can expand into the south of India. So can you sort of tell us how you're using this money? Talk to us about the acquisition. How much did you buy Spalon for? And how is it going to help scale your business at this point?
While the industry is growing at an 8% CAGR, the organized players are handful, and these organized players are going to grow at over 20% year on year. So the opportunity is immense. I mean, India being the best market, I think, globally today that we're in. And I think the money that we've raised is definitely for expansion. Majority of the acquisition cost was borne by promoters, and of course, some of it was as an alternative investment platform, which BlackSoil has helped us out with. And I think both businesses are very, very healthy. Both businesses are EBITDA positive. So they're generating enough, no additional need for working capital. So it was mainly a strategy for expansion.
Absolutely. And any more acquisition plans in the pipeline for expansion?
We're open to it, honestly. I think what we seek is great businesses which have the right models, which have the right ethos. For now, I think organic cocoa expansion, we're going to concentrate in the West.
Ankur, let me bring you into the conversation at this point. So you've invested in JCB Salons. So talk to me about what made you bet big on JCB at this point in time. What was the rationale behind this investment?
So I think we've been now doing the lending business for the last 8 years. And JCB is definitely one of those transactions that doesn't really fit into the traditional kind of deals that we've been doing. It's a profitable business, been in business for over 15 years, great sponsors behind it who have built the business brick by brick over a period of time. And interestingly, when they came to acquire Spalon, Spalon was our existing portfolio company. And we have seen how Spalon itself has grown over a period of time. So this was like a very interesting sort of meeting of, I would say, minds. And the opportunity is immense because from a market size perspective, as Sneh has mentioned, it's a very large market, very few organized players. So when you see cash flows coming in from every store that they have been generating, very few stores would have been even shut down over a period of time. And they have been growing over a period of time. So this makes it a very great proposition from a lender's perspective.
But how big is this beauty and wellness opportunity? Will we see you make more bets in the space? Any other sectors looking exciting for BlackSoil at this point?
So actually, beauty, wellness, consumer space has been extremely important for us. And I would say this must have been a fourth transaction. We started off the journey with Purple and M Caffeine back in the days. So we have seen this really play out very well for us. So this will always be something that we'll keep looking for more transactions, and I'm very happy to hear she's looking for more acquisitions, because that means there could be more opportunity for us to work with them further. And but even from sector perspective, today India is ripe for, like, all sectors are doing quite well. A lot of exciting things are happening around clean tech, EV, fintech is like bread and butter for us. But from a space perspective, it's always we're looking for many deals. You will be surprised, in 2 months you've seen 100 transactions coming to us itself. So there is a lot of demand for our kind of products.
Coming back to JCB, right? So talk to us about how many stores you currently have, what are the kind of footfalls you're seeing, and how are you adding new offerings to sort of keep this growing at this point?
Right now, JCB and Salons together, we have about 50 doors in the country, majorly in the south and the west. I think the footfalls that we are seeing every day, I think they're growing year on year. Last year, we saw almost 40 to 50,000 people coming into the salons, almost every year. So, I mean, if you see the number of people that visit any of the salons are about over 1 lakh in a year, right? And these are not only people who are coming for the first time. Most of them are 65% of them are actually tied in with our memberships. So we have great loyalty base with our customers.
What are the kind of new offerings that you're going to keep bringing in to sort of keep this growing at this point?
So I think right now what we're looking at and what we see as opportunity is the whole care business. Right, so we have already introduced a new care line. We also have a segment called Trica, which is a trichology segment which we operate within JCB, and now we're going to grow into Bounce. We are also looking at products because we believe that retail is going to be very, very large. When we introduce a new product, we do immense amount of testing, so we know exactly what kind of hair in India behaves how. So we've taken all of this expertise, and we're also developing a new product line. So we should have it soon before the end of the year.
So in FY23, you saw your operating revenues grow a little over 50 crore rupees, and you did turn profitable for the first time. So congratulations on achieving that. But, what are the targets? Are you on track to be profitable this year as well? And what's the outlook going forward?
Oh, very much so. I think we're looking at, in the next 3 years, between Salon and JCB, both are EBITDA positive. We are not only growing in the bottom line and EBITDA levels, we are also looking at doubling our top line. So in the next 3 years, we will be double in doors, we'll be double in top lines, and of course, profits will only jump.
Ankur, Sneha, thank you so much for being a part of our show today, and we wish you all the best on your journey going forward.
Thank you.
Thanks for having us.
Absolutely. Thank you.
All right, moving on. Artificial intelligence is transforming every walk of life, but one sector that's already reaped benefits from it is information technology. AI has reshaped the sector's traditional roles and optimized operations. CNBC-TV18's Shireen Bhan caught up with top IT executives from the Indian diaspora in the US to find out how the IT sector has changed and how AI is revolutionizing workplaces. Take a look.
Job creation is what the Indian IT companies did. Besides value creation, wealth creation, a burgeoning middle class, but job creation for young people. And that became a real impetus to the industry. And the thing that most excites me today is the fact that we're creating jobs. My company has 5,200 employees, 53% are women. And the applications of AI are in precision agriculture, and these are a lot of the things between India and the US. Yeah. Precision agriculture, generative AI in healthcare, clinical imaging, autonomous mobility. You would think, where in the world are you going to have a self-driving car in India? But a lot of the mobility technologies around trust and safety and variety of different things, that's a specialty area for us we work on, is very applicable in both countries. So that's the history. And then there's the future.
How are you looking at this limitless future? And more importantly, what do you do to try and get a piece of that?
Yeah, so, we think everything camera at it and automatically understand everything about it, create a digital catalog item for it, could even create a live stream on it. But what's more fundamental is it could also take this jacket and model it on 7 different people dynamically. So you could have it on an Asian person, on an Indian person, on a white person, or on all kinds of sort of ranges. So it starts to really give a power in the hands. And a lot of these models can run on your phone. So it's not even you need cloud for that. So we are talking about unlocking and unleashing the potential at a level that we can't imagine.
Do you see the disruption happening more on the consumer end, less on the enterprise to start with because of the complexities around compliance and regulation and IP and so on and so forth? Do you think the early adoption is going to be more on the consumer side?
I think on the consumer side, what we have seen with ChatGPT and some of the other applications, that's already showing. ChatGPT in 2 months had as much traction like Netscape had over in a decade, the browser, right? And this happens every time, right? Like basically, if you look at it, to get to 50% market share of what your total market is, PCs took 24 years, the browser took 12, mobile took 6. This is going to happen in 2-3 years.
Yeah, NVIDIA has taken a week to surpass and become Apple and Microsoft and become the world's most valued company.
And it's not done, right? Because it's just starting, right? Like so I think my feeling is consumer shows you the stuff with these consumer applications, what can be done. But I believe enterprises, for the reasons you described, are not ready to build stuff. But a lot of business applications, like what Microsoft is doing, Salesforce is doing, apps are going to have AI embedded in them that you start consuming them. So the angle has to be, if a consumer benefits with a natural language interface to get answers to questions, why won't a sales professional get it? Right? So I think the independent software vendors are going to be in a very good place to build these SaaS applications and new startups to help businesses adopt this stuff. But still, compliance, security, all those concerns exist. But there's a huge opportunity for Indian IT services companies and product development companies to go to these enterprises which don't even have talent, right? We have like 2,000 of the Fortune 5,000 companies in our network. They say, okay, my number one issue is get okay from legal. Got it. Right? Like basically make sure data privacy thing is done. Let's build a business case. McKinsey comes, BCG comes, done. Okay, I'm ready. I have no talent. Right? Like basically I'm sitting. So that's where third-party companies have to come and solve this stuff. And there's going to be growth again. What has happened with NVIDIA? Infrastructure spend has gone up 10x. You could build a server for $10,000, $12,000. With NVIDIA, it's $250K. It's 20x expansion. So when I say endless, if everything is going to be AI-based, where is the talent going to come from? Right? They're not even 1 million AI engineers. Probably it's even smaller. Right? And if everybody needs this stuff, how? So I think like it'll be both. But think of businesses, business users as prosumers. They need these things to do their daily work.
All right, before we wrap to news that's just coming in, we've understood from sources that Unacademy has laid off close to 250 employees across their marketing, sales and product functions. And about 100 of these employees were laid off because of their sales performance. This is according to company sources. Remember, this is not the first time that we're seeing layoffs from Academy in the recent past. Just last year, they had laid off around 10% of their workforce to cut costs and to move towards profitability. Remember, they've not reported their FY24 earnings, but as of FY23, they had reported more than 1,000 crores of losses. Now, in a statement to CNBC-TV18, Unacademy confirmed the layoffs, but did not give us a specific number. They said that this layoff round is part of a recent restructuring exercise and was necessary, keeping in mind the company's goals and vision for the year. They added that they will provide support to the impacted employees during the transition, but did not really confirm the number. As we understand, this is to cut costs and achieve profitability.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.